Welcome to today's market report.
European stock markets traded in a mixed fashion on Thursday, with strong auto gains helping Germany's DAX index outperform following a reassuring statement from the Federal Reserve. The DAX in Germany traded 0.7% higher, CAC 40 grew 0.1%, FTSE 100 was 0.2% lower. The Fed Reserve concluded its two-day policy meeting on Wednesday and reassured investors that it was committed to maintaining an accommodative monetary policy for some time. Chairman Jerome Powell indicated that while inflation is expected to reach 2.4% this year, above the central bank's 2% target, this would be a temporary surge, and he did not currently see the Fed raising its benchmark overnight interest rate through 2023. The central bank also projected the US economy will grow by a massive 6.5% this year. The news that the world's largest economy and a global growth driver was set to expand strongly without near-term interest rate hikes has resulted in strong gains in economically sensitive sectors in Europe, led by automakers and banks. Volkswagen stock jumped 10%, continuing recent gains, which have made the car manufacturer the most valuable company in Germany's DAX, as it makes a jump into the electric car market. BMW stock also rose 3.7%, continuing Wednesday's gains, after it was upbeat on its own electric car sales. Renault stock rose 3.4% after it announced Thursday that it will collaborate with Solvay and Veolia Environnement to recycle electric vehicle batteries. In the banking sector, Credit Suisse stock climbed 2%, despite Swiss Bank's annual report showing its executives earning 12% less in total compensation in 2020. The stocks of Banco BPM, Unicredit, Intesa, BBVA, Caixabank, Bankia, and Societe Generale all hit 52-week highs on Thursday. However, it's not all good news. The European Medicines Agency's safety review into the controversial COVID-19 vaccine developed by AstraZeneca and University of Oxford is due to be released later Thursday. This follows several European countries delaying their vaccination programs, further by pausing the use of this vaccine over blood clot safety concerns. Additionally, in the UK, which has been one of the vaccination success stories, the country's National Health Service warned of a significant reduction in the weekly supply of vaccines next month, citing supply issues. The Bank of England will hand down its latest policy decision later in the session, but the market isn't expecting any significant changes. Oil prices weakened on Thursday after data from the U.S. Energy Information Administration showed another rise in U.S. crude inventories of 2.4 million barrels last week, prompting worries of the sustained hit to demand. U.S. crude futures traded 1% lower at $63.94 per barrel. Brent contract fell 1% to $67.29 per barrel. Gold futures rose 0.5% to $1,735.05 per ounce. On the FX front, GBP/USD has been falling in a counter-reaction to the dovish Federal Reserve decision, which may offer a sterling buying opportunity as the Fed fallout may make way to a Bank of England boost. The Fed surprised by signalling it would only raise interest rates in 2024. Moreover, the Fed's reactions are now outcome-based rather than trying to stay ahead of the curve. The Washington-based institution would begin talking about the tapering of bond buyings and rate hikes only after the economy significantly bounced back. Further reactions to the Fed and the movement in yields are set to impact greenback, with weekly jobless claims serving as a temporary sideshow. A small drop in employment applications is on the cards. The old lady is probably to see rising returns on UK gilts as a sign of better growth prospects. The UK vaccination campaign has already reached more than 1 in 3 Brits, and coronavirus cases are falling at a satisfactory rate. For the bulls to rage, GBP/USD needs to convincingly surpass the psychological barrier of 140, which has capped the pair twice in the past week. Support awaits at the daily low of 139.35. Euro-dollar has been rejected at the 119.90 resistance. The pair is set to remain under pressure as the greenback is gaining new ground as the dust settles from the Fed's decision. The support awaits at the daily low of 119.35, followed by 119.10, which was a cushion earlier in the week. The dollar index fell by 0.46% to 91.44, levels last seen at the end of last week.
This is today's market news. Thanks for listening. We'll see you next time.